So in this video, I'm gonna go through that one simple day trading strategy that I use to this day to make a lot of profit. And it's actually very simple. So I've been using this for almost 4 years and it is so effective. When it appears, take it and you can catch a really big move like, okay? And the best thing is, it is always the same setup, the same confirmation, and pretty much the same move. So let's dive into the video and actually go through this, what the strategy is, what the confirmations are, and how you can do some other thing. This one's a secret. So yeah, watch the video, leave a like and subscribe. And the purpose of this whole video is to give you guys free value and improve your trading game. So I make a living day trading this one simple strategy in 2023. And it consists of a couple of things: key levels, liquidity, 50 moving average, and candlestick patterns. When you combine these four, voila. And this was something that I actually sent in the signal group, the analysis. So at the end of this video, I'll put the actual analysis so you can see. So I actually did it at the time it happened. So let's look at this Euro USD, and this works on the 4 hours. First of all, we can see that this price action broke the trend line over here, okay? But you have to pay attention to what is going on around this section over here. Every time price tried to close under this area, it went and closed back above it. It's very bullish price action, okay? That's the very first thing. Now, as far as talking about key levels, if we go onto the daily time frame, what we can see that over here we had a very clean break of structure, okay? Everyone can understand this, very clean. We consolidated for a while and then boom, break structure. Now, where is this price action at this moment of time? What we can see is that price action is at this demand zone. This red candle is the opposite candle before the big move. So we had bullish, 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 and this was bearish. So that's the demand zone, okay? Very simple stuff. Now, we know that we are at this very strong daily time frame demand zone. The higher the time frame, the more stronger the signal if you're trading it, okay? So this is the key level that we mark. Coming back to the 4 hours, so where are the relative lows? Let me point out on the screen. So here is 1 and here is 2, okay? And as price came down here, this little tap was the grab of liquidity from these relative lows, okay? So now we are at the key level, liquidity grab has been done. What's the other two confirmations? The 50 moving average and the candlestick pattern. Let's go to the candlestick pattern. So this is the 4 hours time frame. What we need to look is what's happening here at this price action. We can see that we had a bit of bearish pressure, and then we had this doji. What is a doji? You need to understand. A doji is basically there's sellers trying to push price down and there's buyers trying to move price up. So it's a bit of indecision. There's a bit of struggle of power. They're trying to push it down, they're trying to push it up. The market is like, I don't know where to go. So that's the very first sign. After that, look at this nice bullish candle that really engulfed the previous candle and it grabbed liquidity. Then we had another bearish engulfing candle followed by bullish engulfing candle. So look, this engulfed here, this engulfed here. So this is the candlestick pattern that we are looking for, okay? When you're doing the 4 hours, this is your first entry. Here we don't care about the moving average, it doesn't apply. The moving average applies to something I'm going to show you in a bit. So now that you have this bias, here is going to be your stop loss at this low that grab liquidity, okay? So SL, okay? You can enter straight away, put your stop loss here and then target higher price action. Where are we going to target? We are going to target around here, this imbalance around here, because after this we don't know what price is going to do. So we're essentially looking for something like this, okay? It will take all of these people out, it comes and reacts off this demand zone and it will touch this imbalance, and then after that we're not sure, okay? So that's the overall idea. So let's go through the confirmation once again so we can really understand this. Key levels, done. Liquidity, done. 50 moving average, it doesn't apply on the first entry, it applies later. I'm going to explain in a bit. And the candlestick pattern, done. Okay, we have all of the confirmations we need. Now simply entering here would give you a RR of 2.6, okay? But I don't want that. I want a better entry so I can have a better risk to reward ratio, okay? So I went on the 1 hour. We can see that price has potential to come down here because we have this order block and this imbalance. So already it would give us 8.2 RR. But what I did, I went on the 30 minutes. Okay, good. I went on the 15 minutes, and this is what I did. I was waiting for this area over here, this nice candlestick pattern, which is a order block, and it's also the level that broke this area. So this was, price had good reason to come here, tap into this, mitigate this order block, okay? And we have to also remember we have this 30 minutes area, but I wanted this, the very extreme, okay? Now everything is good, okay? Now you wait for price to do its thing. Boom. Price literally tapped into this 30-minute order block, but not that 15-minute, okay? But I was still holding my position. Yeah, what happened? Price never came to that 15-minute that was gonna give me almost 14R. This here would have given you 8R. Let's assume you took a trade from here, okay? You would have had a bit more than 8R, okay? Now, what we can see here is the previous daily high, okay? So let's mark it like that, okay? Let me remove this big area. We already know, okay? Now, what I wanted price to do is basically go break, retest this area to go higher up, okay? This is when I would do what? I would stack. Stack is the process of adding additional position to a specific forex pair. So if you have one position, you're gonna add another one, that's stacking, okay? Very simple stuff. Let's see what happens. Price came, did one retest, not good enough. It needs to come and do another one, just like this. It came to the area, we had nice bearish movement, and then we had a nice engulfing. So here you would have added another position. Now, this is when you would add your 50 moving average because you're stacking. On the first position, when you do the 4 hours, it doesn't apply. So we can see the price action is above the 50 moving average, so buy would be good. Not only that, we went here, came back, did a retest, went here, and did a knife. So once we broke this area, this was broken the previous area, so this is a new high, and this is a new high as well. So higher high, higher low, high high, potentially for high low to go higher. Now, where would you put your stop loss? You can even put it just underneath this, but because we got these relative lows, it's a bit risky. Just put it under this moving average and target the same area. So here you would get about 8.5R, and here about 3R. So over 10R. Obviously it missed the initial area that I was looking for, but I'm being very greedy. You could have gone for the 30 minutes, or you could have waited for the 15 minutes. I'm very happy with my decision. Although I missed the move, I don't care because I'm following my trading plan. Very important stuff. Okay, let's see what happens. Yep. Price, even if you put your stop loss here, price would have respected and give you extreme RR. So in this case, you made more than 10R. And this is how you use the 15 moving average to only stack. When you did the initial entry, which is more risky, you don't use the 50 moving average because it doesn't make sense. Price is trading under it. But we know based on the higher time frame, we are at this demand zone, liquidity grab, everything looks good, and this candlestick pattern looks very nice. Okay, so this is how you do it, and this thing, whenever it appears, I take it. It is so powerful. It's almost you have a magic tool. Yeah, simple as that. So yeah, guys, whenever you see this, do this, and if you get a position like this, stack it. I even told people in the free Telegram group, let me show you, that when price came down here, look for possible entries. So yeah, this was the analysis I sent in the free Telegram group. I said as soon as it break above this daily high previous, come back for retest, buy. So this is my analysis for Euro USD. As you can see, we had these relative lows. Price took it and straight away we had the reaction. Look at this price action over here. So we had a doji followed by a very strong bullish candle, and then we had some bearish candle which engulfed the previous candle, and now we're having this other 4-hour candle that is almost engulfing this red candle. If it really engulfs it, then we are going to look for buy entries. Obviously I'm going to refine the entry to give us the best RR. And the best thing is that, look, if you look back here, we got so much imbalance and price has good reason to fill it. If we go to a daily time frame, what we can see, the price broke above this level, okay, and price is basically reacting to this order block or demand zone. And look, break previous daily high, came back, did a retest, we're above the 50 moving, boom, all of that. Now, if you're greedy and you didn't know where your take profit, look what would have happened. Price literally came to the T of that area, which was the 4-hour imbalance, came back, it would have stopped you out in here and here before going your way more. So yeah guys, apply this very simple strategy to make good profit trading. Yeah, let me know how it goes. Peace.